Let's talk about earnings. And one of the companies which came out with a blockbuster set of numbers this time was Jindal Saw. All-time highest quarterly sales, and that too 31% kind of growth coming in. The stock did very well yesterday, and today also is not giving up those gains. In fact, it's trading in the green. Neeraj Kumar, Group CEO and whole-time member, director, is joining us to talk more about results. Neeraj, good afternoon. Thank you so much for your time. Outstanding set of numbers. I must congratulate you and your team. Now the question is, you're already clocking 250 crore in PAT, about 5,200 crore in top line. Is it safe to assume, say, you're on the run rate of almost 1,000 crore on the profitability 12 months forward, and almost 21,000 crore, almost thereabout on top line front?
Namaskar and good afternoon to you and all our viewers. Yes, we are delighted that we have posted a very good annual result, the best time ever. Now, this is a result of very rigorous and detailed planning and lot of hard work, staying on course when the pandemic or the commodity prices tend to act as disruptors. So what you are seeing is a result or a culmination of a lot of effort, which was backed up by a plan. And today we feel very happy that we have not only got a result, but we also have got the fundamentals and the momentum where this would sustain. So we expect the trend to continue based on our current operations, based on our current order book. We are very confident that the trend of growth, we have a visibility for at least next 12 to 18 months. With now the government putting a lot of emphasis on the infrastructure, which is the water, oil and gas, industrial sector, which is defense, we definitely feel that yes, now Jindal Saw would move from strength to strength from here on.
We've also seen margin expansion happening. Talk to us about where would you see the margins to sustain from here on?
Yeah, you would have seen an improvement in the margin, but there is still some scope, there is still some headroom. And in the coming year, we expect the margins to improve further, primarily because the commodity side, which is largely all our raw materials, we are seeing some stability. More important, as an organization, we are making effort to enter into value-added segments, which is stainless steel. Now with stainless steel, we have managed to get an entry in the defense sector, in nuclear power plants, in defense. So various value-added sectors. This year, we would also be entering the instrumentation sector, which has stainless business. So there is an effort to move towards value-add services. In DI, we have the double chamber pipes. So every segment, we are making a conscious effort to move up the value chain so that the margins tend to improve. So a combined impact of all of those, we expect that the margin should improve further. There is still some headroom.
Right, Mr. Kumar, this is Vinny joining in the conversation as well. One thing we also want to understand is in terms of the crude oil demand and the prices. If you see any further fall there, what would be the impact of that? Given that, your business, considering significant portion is actually coming in terms of exports of the Middle East, oil and gas, EPC projects, as well as the turnkey projects, how will that work out for the company then?
Crude prices are crucial for the oil and gas companies to continue to make investments in the pipelines. Because as we all know, indeed, pipelines are the best transport mechanism for any fluid, more so oil and gas. But there must be a minimum benchmark of crude prices so that these projects become very viable. Because as you would understand, pipelines are capital intensive, and then little less on OPEX or maintenance. So as long as the crude prices stay in a corridor where they are at present, we don't see the pipeline demand or the investment in pipeline going down. It's only when the crude starts falling below a certain comfort level, which we don't see at this point of time, seeing how the OPEC and the OPEC Plus have all got together to at least sustain the prices or support the prices up to a level. We don't see that happening. Second, important, there are a lot of uh, pipelines in oil and gas sector in India, which is in the tendering stage. And that we definitely see happening in the next 12 to 18 months because the oil and gas demand in India is a little more inelastic because, as we all know, we are very energy dependent still. As a country, we rely heavily on fossil fuels, both imported and domestic. So, a combination of all of these gives us comfort that not only we have a very healthy order book. If you see today, our order book stands at upward of 12,000 crores, which is a shade above our sweet spot. And we would continue to build on that.
Right, Mr. Kumar, thank you so much for joining in with us and giving us your time this afternoon on ET Now. That was the management of Jindal Saw for you all.